Hello everyone and welcome back to another Brisbane property market update. Today I'm going to be sharing some of the most recent data that's come out from the major research hubs of CoreLogic as well as PropTrack, and I'm going to be providing a summary of what we have been seeing on the ground here in Brisbane. So I hope you find some enormous value in the information that I'm going to be sharing today. First of all, I'd like to provide a market snapshot. This is information up to the end of March, and it just summarises what we have been seeing on the ground and through the data in Brisbane over the last month. First of all, listing volumes, they're down 17.1%. Now that's new listings compared to 12 months ago, and we've got some data to support that as we run through this brief presentation today. Auction clearance rates on average, according to Domain, across the month of March, 53%. So that's an indication not only of improved buyer confidence on the ground, but also the seller's sentiment, the seller's ability to or want to meet the market. We've got high buyer activity. That's definitely been something that's been a trend we've been observing since January this year, especially for quality properties. There are some properties still sitting on the market for longer, but they generally are the properties that have some impacts, which we will talk about today as well. We've got house values, according to CoreLogic, have increased for the first month since May last year. We've got 0.1% price growth in the median value across Brisbane house prices. And for the unit market, we've got 0.2% price growth over the month of March. Remember, this is now reflective of transactions that occurred in February. So we've definitely been seeing on the ground activity improve month on month, and therefore we expect the April data, which will come out at the end of this month, will show that this positive trend is likely to continue. Gross yields for all dwellings in Brisbane currently sitting at 4.3%, and we will break that down into both the housing market and the unit market in this presentation today. So first of all, let's look at listing volumes. So this is CoreLogic data, and it does confirm that listing volumes are still low. So on the left-hand side, we've got listing volumes this year, new listings compared to the same period 12 months ago. You can see there for Brisbane, we are down negative 17.1% in terms of the number of new properties that were listed throughout March this year compared to March last year. We've also got total listings which remain relatively stable across the two comparison periods. So when we look at total listings, that's an indication of the total volume of properties available for sale. So 1.5% change there. So really we've got a similar volume of properties available for sale, and yet new listings are trending down. So what we can interpret from this data is that there's more older listings sitting on the market for longer, and generally they're the properties that have some impacts, and that's why we're not seeing competitive buyer activity run through on those particular properties. But in terms of buyer demand, it's definitely increasing. So here's a lineup of a property that our team attended. This is not uncommon, especially within the Brisbane City Council region for quality properties at the moment. Despite what you may be hearing or seeing in news headlines more recently, we are starting to see the buyer volumes pick up rapidly in Brisbane. It has been a trend we've been observing for a number of weeks, and something that we've talked a lot about in the podcast that we run, Brisbane Property Podcast. So if you're wanting to get regular weekly updates on what we're seeing and what's happening, please subscribe to the Brisbane Property Podcast. You'll get those more regular updates. But in the meantime, we're seeing an increase in the volume of people at open homes. We're actually also seeing an increase in the number of registered bidders at auctions, and we're also seeing an increase in the number of multiple offer situations when properties are being sold by private treaty sale. In fact, every property that our team have purchased on market over the last 2 to 3 weeks has been under a multiple offer situation, which means there's more than one buyer that has submitted an offer on that property. So we're starting to see that little bit of FOMO sneak back into the market. And I stress once again that this is for quality properties in A-grade locations. So you might be asking, why is this actually happening? Like, why are we seeing this frantic activity from buyers start once again? And why are we seeing low listing volumes? Look, we're starting we know, and it's been proven, that the population growth in southeast Queensland has been significant. And you can look at this graph and see that since the start of the pandemic, Queensland has actually seen the greatest volume of people locate to our state compared to every other state across Australia. Now, this is at the same time as we've not seen a corresponding increase in the number of properties that are available for sale or rent. And it's part of the reason why we've seen this rental crisis occur citywide. More and more people coming into Queensland generally means the large majority land in southeast Queensland. And of course, Brisbane being the capital city, sitting between the Sunshine Coast and the Gold Coast, we are a large recipient of a lot of these interstate migrants. Off the back of COVID, we saw a lot of interstate migration out of Sydney and Melbourne, or New South Wales and Victoria, into Queensland, and that's obviously put upward pressure on these numbers in terms of population growth. Since the international borders have also opened, we're now seeing strong migration into Queensland, especially from overseas students, and we're also seeing, anecdotally, a lot of expats returning back into the city. So we've got more and more people relocating, and everybody obviously needs a home. Are there any other reasons? Now, this is CoreLogic data for Brisbane on the left. In the middle is Sydney, and in the right-hand side is Melbourne. And we've got housing data, and then we've got unit data. Now, what is very clear here in terms of median values is that Brisbane is a much more affordable location. A lot of our buyers that come from the likes of Sydney and Melbourne cannot believe what their money can buy when they're looking to purchase a home or an investment property here in Brisbane. Because we are a more affordable market, we're seeing a higher level of demand into our market, especially from buyers that may look to rent-vest, that is, invest in another capital city but live in either Sydney or Melbourne, especially being the two largest capitals of Australia. So we're seeing this trend continue, and it's another reason why we're starting to see the market movements as they are. So let's have a look at what's happened across the month of March. This is CoreLogic information for house values. You can see Brisbane highlighted here. Across the month, we saw 0.1% price growth in median values. And as I pointed out previously, this is the first month since May last year that we've seen positive house price growth in that median data trend. Quarterly, still negative at -2%, but that has actually been rapidly recovering, and we've been reporting since January more buyer activity in a low listing volume environment, which is causing this rapid improvement. Annually, you can see their median values are still down -10.4% in Brisbane off their peak. Now, that presents as good buying opportunity, obviously, especially when we're starting to see this trend reverse. Being able to potentially buy something that you may have had to have paid more for 12 months ago is obviously very beneficial if you are a buyer in the market. That said, just because you may have owned a property previously or purchased a property 12 months ago, it doesn't guarantee that your property is now down 10.4%, because we do believe there's a lot of compositional bias in the data, in that what has actually been selling is more a reflection of that median data trend, and a lot of quality properties have not been coming to the market. So what's made up within the data is causing that median trend to show in that particular way. Looking at PropTrack data for houses, you can see here PropTrack over the same period of time, whilst it's meant to be recording the exact same information, there's always a discrepancy between the two data houses. We've got PropTrack movements showing -0.02 price growth in houses for Brisbane over the last month. And they're putting annual growth at a much more subdued -3.59%. So again, a lot of discrepancy between the two data houses, but generally showing that there's definitely a recovery, and we're not seeing those large median value falls month to month like we were a number of months ago. In terms of the unit market in Brisbane, it is still showing consistently higher levels of resilience compared to the housing market. We've got monthly growth in March of 0.2% in the unit market for Brisbane. Over the last 12 months, we've had 2% change in property values. So whilst the housing market has declined in value according to median values, we've seen actually unit markets recover and grow in value over the same period of time. We're starting to see more and more people willing to make a compromise on the product type to stay in more desirable locations. Because we had such significant price growth throughout the pandemic boom, property values across all of Greater Brisbane increased 42%. They've now retracted 10% according to that median value, so they're still up about 30% on where they were prior to the pandemic. That's priced a lot of people out of the housing market, and as I've mentioned, they're starting to look at units and townhouses as a compromise to stay closer in towards the CBD. Unit values according to PropTrack data, we saw monthly price changes of negative 0.3%. Again, an inconsistency between the two data sets. And we've got annual growth in the unit market, according to PropTrack, sitting at 3.76%. But let's have a look at the change in house price growth and unit price growth since the beginning of COVID. Now, the black bars here show the monthly growth or decline in median house values, and the blue bars are the monthly change in values for the unit market. So you can see that we definitely had much higher and stronger growth during the boom period post-COVID. And then we saw retraction in the housing market a lot faster. But what we've highlighted here is the recovery. And from back in November, where we saw the greatest monthly decline in values, we've seen a rapid recovery. And where this goes next month, no one knows, but we're certainly seeing strength on the ground, and we do expect that the upward trend is likely to continue. The unit market still saw growth through the post-COVID boom. The retraction has been a lot slower and more gradual and less severe, and we're seeing a recovery in that market as well. Vacancy rates, yes, there is still a rental crisis throughout Brisbane. Vacancy rates are still at record low, sitting at 0.8% citywide, and you can see from our period back in 2016 where we had vacancy rates citywide up around 4%. We've had a massive change in the number of properties available for rent, and that's what is causing such strong upward pressure on prices in terms of change in rent values. So when we look at the housing market, we've seen 11.9% growth in rents in houses across all of Greater Brisbane, according to CoreLogic data. Whereas in the unit market, there's more strength in rental price growth, 16.1% growth over the last 12 months. This is not good news if you are a tenant, because when your tenancy agreement expires, it's more than likely the case that you will see rent increases. However, if you are a landlord, obviously this is going to help to offset the costs of rising interest rates should you have a mortgage on the property that you own. Of course, there's also rising costs associated with holding properties due to the high inflationary environment that we've been in as well. Please note, this is not, rental price growth is not a direct result of higher costs to landlords. This is a result of fewer rental properties being available in the market and much higher demand from tenants, and that is what's putting upward pressure on those rental prices. What are we seeing on the ground? Here's a few snaps from across the month. An auction in a south side over at Bulimba. You can see the volume of buyers in attendance. This is inner city at Ashgrove. Again, a lineup property. In this property, there were more than 60 groups through the very first open home. And here's some in-room auctions. This is a lower price point property, just under the $1 million mark, but the in-room auctions were being held at West End, and you can see a strong volume of attendees there as well. I hope that's been a helpful market wrap for this month. If you have any questions, please reach out to us at Streamline Property Buyers. And if you need help navigating the Brisbane property market, we are always here to help. Have a great month. We'll be in touch again next month. Bye for now.